2010, there's where we are. And going forward under the current policy, this is the shape of our debt curve under the current policy.
That hasn't actually happened yet.
No, this is 2010 right here.
Right, but that's what it's going to be.
Here's 2020. 10 years. In 10 years, we'll be at the highest level of debt, that we've ever had since World War II. In 20 years, we'll be twice that. And in 30 years, it's just unsustainable.
Are these congressional budget offices?
These are congressional budget office numbers.
Are they in published documents somewhere?
Well, you can go to budget.house.gov.
The most telling part of this chart is right here. Right here, and then right there.
Well, I'm just saying, this is what the numbers are.
That's
today,
the most revealing part of the chart.
Under current policy. So this is. Let me just go through the presentation, then we'll talk about it. This is where the government spends your money. Okay, it's a pie chart showing, where the government spends its money. To say that we're going to tax the rich and solve our problems, because you could tax people, anybody over $150,000, you could tax them at 100% of their income. It would not affect this curve. Okay? It would not affect. It would not affect this curve. It would not affect that curve because we're spending too much money. The problem is not that we're not getting enough money. The problem is we're spending way too much. We have the highest corporate tax in the world.
No, you don't. It's the lowest right now. We've been in decades.
No. We have the highest corporate tax rate in the world.
Nobody pays that.
And the lowest
There are
percentage of
loopholes.
corporate taxes that actually get
It's like
paid.
14% compared to.
No.
Some of them pay 6%.
It's going to take
And some of
revenue
them pay
increases and
9%.
spend.
Hey, listen, I'm against that.
Then do
I'm like,
something
well, because
about it.
they have a tax credit. If somebody's getting a tax credit for building a windmill, okay, I'm against that. I'm against for Jennifer Granholm giving these battery manufacturers in southern Michigan a $900 million tax credit, and the rest of us are. What's that?
Even though that'll create jobs?
What about people here that are paying taxes already that are creating jobs?
They're not creating jobs.
Yes, they are. People, every little gas station, every little store, every little business in this whole
But they're not
Upper Michigan
creating new
hires
jobs.
people,
But they're not
and they're
creating
paying higher
new
taxes
jobs.
to promote that battery factory.
And the battery factory
Okay,
would
well,
create new
okay,
jobs.
no. What about people that here?
How does it
You're
not?
against doing these subsidies. You're against having low corporate tax rates, and I'm explaining to you one of the corporate tax credit, and then you're saying why not we keep it?
I'm not saying why aren't we keeping it, but when you
Well,
say
I'm just saying,
35%
a
corporate tax
lot of the
rate
reasons
is
that
not
people have these
true.
low tax rates, these corporate tax rates, are for government stimulus, a government tax credit to promote that industry. So I don't believe in promoting one industry over another.
Well, tax credits versus income tax are different things. They're not paying at a 35% rate. Some of them don't pay anything.
Well, you'll have to show
And
me
the
an example of
average
that.
is 6%.
You'll have to show.
Zero taxes.
Well, I don't believe in that. I mean, I believe in having a uniform tax rate with no cutouts for certain special
Then
people.
don't say that they're paying at the 35% rate,
Well,
because they're not.
Most of the corporations pay a 35 to 41% tax rate.
That might be what it says on the books, but when they get done with their loopholes.
But you'll have to give me an example.
GE paid nothing.
Well, that's wrong. I agree with you.
Really?
They're not the only ones.
Well,
That's
you have to give me
wrong.
another example. When Ford Motor Company builds a car, they pay a tax to the government for the price of that car. They add that tax to the price of your car. And and you're paying for that when you buy the car. That's just added in there to the price of the car.